Hello and welcome to IV Society. And this is AJFX, and we're gonna do a trade review. And this is the trade that we're gonna review. How did I ended up with that thing, that buy stop? Why did I end up? And then as you can see, trade got triggered and then had a minor retracement. Price went up again and confirmed this block, this MB, and then going again inside the demand zone to fulfill orders, touching also the 200, and then went straight up until the 3 RTP. And as you can see, SL was not been hit at this point. And so we have a winning trade. So going back to the 5 hour, the context where the trade and setup came from originally, the exact pinpoint of that, right? So price somewhere here. As you can see, money started coming in at this point, and then money came in again at this point, and then we are reaccumulating inside this confirmed demand because every swing that has been wicked or even closed above will serve as a demand zone, perfect for retracement. And as you can see, price is touching the EMA once again, and if price is moving further from the EMAs, that means money is potentially coming in the market and we can trade this type of setup. So going down to the lower, as you can see, we are now touching and we are confirming those blocks right here. So ibig sabihin, this is a retracement inside this demand. Because every swing that has been validated could be a potential reaccumulation. So going down to the 30, because we use the EVC by MetaFX, 5 hour, 30, and 5. Total calculation if you watch the other videos. Have videos like that on my Discord. So during the 30 minutes, what do we have? So I'm waiting for price to go above the EMA once again. Of course, confirming blocks of demand that we can retrace into. So once price confirm this block and retrace into, EMAs might follow up with that, and then price can keep supporting the demand zone. And then what do we have now? So at this point, price has started to come, money has started to come in, but we need to validate that by the retracement of EMAs holding the fresh demand. Because once price do it like this, so this is a fresh demand. At the same time, breaking also the high that can also serve as a potential demand zone. So what happens? What happened next is price dipped down into the EMAs, just like what we have anticipated, and then price started to go up, right? So moving down to the 5, that means money has started to come in at this point. So at this point, as you can see, we have a retracement inside the EMAs. So potentially price can move up and confirm another demand zone, and as well as retracing back to demand zone areas, even on the weeks, because if a candle has its own wick, this zone is a valid demand zone too. So that's what we know. Then I took a buy stop once it had been dipping lower into this demand zone. So I'm expecting price after this dip is to go up. So basically just confirming another demand, but this high, this demand that has been yet to be confirmed is the buy stop. So once price move up a little bit and then break the fresh low that it has been printed here, so I'll just cancel this buy stop. But then price reached above that high, confirming there's a demand that can hold here. Price can now either fly or just retrace and draw another fresh demand zones. And as you can see, what happened, just use the play. Okay, fresh demand zones, fresh demand zones. So basically, this is a double MB right here. So that's what we call a cluster. So these two MBs that has been confirmed at this point. As you can see if you zoom in, right? You can see price confirming this MB. This whole area from the low of the first MB to the high of the second MB, that will be the demand or double demand zone or double demand. That means it is a cluster of demand zone that when mixed together, it creates a strong area that price can hold, and also an area for the composite man to liquidate lows, induce fear on the market, induce bad trading psychology to the traders. So the traders can now either place a wrong trade direction or just spam trades, buy and sell at the same time. So there are a lot of type of traders. And yeah, the rest is history. After the creation of fresh MBs, as you can see, price just retraced on the lower part of the demand zone. Okay. So pretty much, and then went deeper again. Maybe at this time they are constituting sell trades to other traders. So because they are seeing this as they call the, I don't want to mention it, but that's what they call it. So they are expecting our price to reverse. But as you can see, we're in a clear trend. Money coming in the markets. Any price that is trading above the EMAs, not touching the EMAs, basically is the zone where the money came in. And then it went up straight up. So the system, just like what I always say, my system in trade managing, some do trails. I did trails in the past, but this is by far the system that I am most comfortable with. So by 1 hour, by the time price reaches 1 hour in profit, I'll trail to break even. So at this point of time right here, I'm on break even point. Once price reach 2.7, I'm gonna trail to 2, and then let it hit 3 hour or 2 hour trail, whatever. So I'm just gonna highlight the 2.7. So once price hit that, automatically trail is set to 2 hour. Now prices hit that. Now the trail is right here. And then let it hit TP. I'm gonna stretch the TP for you. Let's see if it's gonna okay. So at this point we hit TP. So overall, the trade came from 5 hour. The trade always comes from their context. From the 5 hour, a little bit of retracement on the EMAs. 30 minutes, same thing, waiting for price to show its hand, the EMAs, and then on the 5 minute. So on the 5 minute, the area where the liquidity is being targeted from, that will become basically your buy stop. You just have to wait for price to bounce off the EMAs and then create a zone where you can buy stop, or basically just a high that you can buy stop. And then this will happen, basically. So yeah, that's the whole trade. That's the whole trade I did review. So it's pretty much a simple approach to the markets, but very effective all throughout the year. So hope you learned something from this, and see you at the next trade review, guys. Bye.